So we're seeing banks struggle with customer demand on one hand and then quite restricted resources on the other. How do you see the evolution of technology helping them to balance out the innovation they need to create against the costs and challenges they have around cost?
I think you're right. Striking that balance between, on the one hand, profitability of the business and costs, and on the other hand, innovation has always been a great challenge as far as the industry is concerned. And I think it's become a challenge that's even more difficult now as the banks are in quite difficult periods, because particularly when you look at the levels of investment that they're having to make in things like regulation, there's not a lot that's left for them to be able to innovate.
Right.
Now, I think one of the things that's really starting to change the game and making it quite interesting for the industry is what is happening with the fintechs coming into being. Because rather like other industries, you saw in the pharmaceutical industry how research and development was outsourced effectively to the universities and the biotech companies. What's happening now is the banks have a real opportunity to take advantage of the fintechs to do quite a lot of their innovation. And the fintechs are very good at that. They really understand that customer problem because they're coming at it from the perspective of solving that single, simple customer problem.
And is that relationship an easy one?
I think the banks are all experimenting at the moment, and I think it has many dimensions. So, part of it is a investment proposition to the larger banks. So they're very focused on what's happening with the fintechs, and not only how those technologies are going to help them, but also how they create good opportunities for capital investment. I think the fintechs are all very, very eager to work with the banks, and I think one of the things that has to happen is the industry needs to create more platforms, open platforms, which is something at IBM we're working on intensively, so that you create these open environments where the fintechs can come and the banks can look for the services that they need. So this notion of open marketplaces is being very much driven by bringing these two parties together.
So you hear a lot of discussion around the two-speed economy, and I think that's kind of very, very apropos for the banks because, on one hand, they have to meet all these new demands, right? And they're taking innovative approaches, they're setting up innovation labs, they're using agile development, they're moving from a release mentality into a continuous improvement deployment model.
Yeah.
At the same time, these institutions are part of the financial stability of capital markets, of the world's financial systems, and so resiliency and the integrity and trust that's needed in the financial markets is critical as well. So you have to work both sides of this equation, and what we're seeing obviously is cloud technology and other deployment models come in to alleviate some of the expense pressure associated with running the production side, and that lets them move investment dollars over into the innovation model and lets them compete effectively with the new customer experience that Liket mentioned and some of the fintechs that are out there.
Okay.
I think you're also seeing, and this is almost like a replay of what happened at the arrival of the internet. So a lot of discussion about what's the right model. So do you want a model where innovation is sort of part of the day-to-day running of the business, because it's such an important imperative and the speed of technology change is making it so important that it gets embraced quickly?
Yeah.
Or do you want a model where you set up almost a separate unit and that unit alone thinks about innovation? And obviously the risk with that then is it becomes a little disconnected from what the actual business demands are. So a lot of conversation around what is the right model for this.
You can see why there would be a sort of cultural challenge as well between the two models.
Right.
Do you think that makes them skew one way or the other?
Well, I think the cultural challenge that you talk about, happens in any organisation. Who's working on the cool new stuff versus who's got the responsibility to continue to drive the existing core business
Kids
that's so critical.
Adults.
Kids versus adults. Yeah, I think that happens.
And I think the other thing, Sarah, as well that we've seen is the traditional banking model, which is being, you've got the business units and you've got a technology function, and often that technology function is being completely separate. So, whenever there is innovation, you get business thinking about some ideas, they then get tossed over the fence, and it's the perennial problem. I mean, the number of bankers that complain about the fact that technology doesn't actually do for them what they want, you could go to several clients where you're in that kind of situation. So I think not only culture, but organizationally, banks are having to come up with completely new structures to the kinds of ones that they've had today. And some of them have done. If you look at banks like Garanti or Santander, for some time, their philosophy has been that fundamentally they're technology companies.
Yeah.
And that are in the banking business, which is essentially what fintechs are doing as well. So merging that's become very.
I think also the notion of split between technology strategy and business strategy is gone, right? And so, I think you go speak with any CEO, one of the first things they're asking you about is what is the impact of blockchain on our business? What is the impact of cognitive? So this is now a conversation that occurs at the most senior levels in a bank, and it's no longer something that is thought to be the preserve just of the technology group, but business and technology have to actually.
And there's no safe haven. Lickett and I were in Brazil recently, and the banks in Brazil are fortunate; they still make very high return on equity. But even there, they're asking, how do we take 30-40% out of the cost structure? So they realize that to be part of the future in financial services, they have to be fundamentally more efficient and fundamentally better with clients.
And just to kind of top that, and then they cannot allow the legacy to get in the way of making this happen. A lot of them have got very complex legacy systems.
Yeah.
And again, I think the financial crisis in some ways is helping that, because again, a lot of the investment, a lot of the time that the industry would have traditionally spent in trying to solve that complexity in the legacy, they don't have the luxury of doing that. So they're having to find much more innovative ways of being able to not spend time doing that, but still enable the front office do all of the things that their customers want.
And I think on that point about what the customer wants, the bar is the highest it's ever been.
And changing all the time.
And changing all the time, exactly.
One of the challenges they have, and we'll talk about this later, I know, is the amount of money they're having to invest around risk and compliance.
Yeah.
Is really seen as a major challenge, and has been increasing for several years, obviously, with good reason. We need to have a banking industry that's well regulated, but the way the inefficiency in the system today around being compliant, that challenge has to be addressed. I'll give you one example. You go to a global bank, they operate in 100 jurisdictions. And so while there's some level of regulatory convergence across that, just imagine the complexity of having to comply to 100 legal frameworks, all of which are complex, all of which have been getting scrutinized very carefully. And the cost associated with that has been driven largely into labor as we speak. And that part of the cost equation really has to be addressed.
Right, a big global bank, to your point, it wouldn't be untoward for them to have up to 40,000 people working on regulation.
Wow.
So the opportunity for automation is obviously huge, but to Ian's point, the labor cost is massive at the moment.
It goes back to the cognitive discussion we were having.
Exactly.
We think that's one of the approaches that's really going to help, because you can ingest essentially all the regulatory change, and you can understand, okay, across those different jurisdictions, many of the requirements might have been addressed already. So all you have to really identify are the 2 or 3 that might be specific to a particular market, work on those, not have to read everything, interpret everything, look at your controls posture, and launch a big effort around it, changing the regulatory frameworks.
Sure.
Yeah, and it then enables the banks to focus the attention on the more higher value added part of that risk equation. You make it, because ultimately they're again in the kind of risk business. Yes? So rather than spending all of their effort, all of the expenditure around routine compliance work, a lot of the grunge work that's involved in here, you can look at interpreting those and how they're going to use those in the sorts of things that make risk a source of competitive advantage, as opposed to purely having to do exactly the same thing that every other bank is doing in this space.